Welcome to the Phil's Gang YouTube channel. Well, we're being told that everything's just doing well, everything's ducky, everything is fine, the economy's moving along. And I don't believe that, and by the time I get done with this, you're not going to believe it, and I'll prove it to you. But first, let's go back to this guy right here, Bernanke. Remember, he appeared in front of Congress and asked them this question.
Wall Street has benefited more than Main Street has? I don't think so.
He said, Wall Street has not benefited more than Main Street. Oh, is that right? Well, here's Wall Street. So let's see. They gave Wall Street, gave Wall Street $33 trillion. Gave Wall Street, what do we call it, $3 trillion. And the $3 trillion in the form of QE, quantitative easing. So Wall Street, they printed $3 trillion right here. They printed $3 trillion in the form of QE, and that money was injected, directly into the stock market, right into stocks, all right, right there. And so because it was directed into stocks, the stock market went up. The stock market went up 100 or 200%. 200% move in the market with an investment of $3 trillion. So that meant that a small sector of the population of Wall Street, the rich bankers, the top 10%, so the top 10% of the population, received all the benefits of this 200% rally on the $3 trillion. It was injected into the stocks. Now, let's go take care of Main Street. Now, he's saying, Wall Street didn't do any better. Really? Well, let's take a look at Main Street and see what Main Street did. So here's Main Street, a little car, and Main Street was given a stimulus of $33 trillion. Wow. That's a lot of money, $33 trillion. That's what they gave to Main Street. Now, this was called stimulus. $33 trillion in stimulus money, Now, what's stimulus money? Stimulus money means you're supposed to take it, you print it, and then you give it to where it does best, where we get economic growth, where we get growth from the economy, where we create jobs, you're supposed to stimulate the economy in jobs, productivity, that sort of thing. Well, let's see how well they did with the $33 trillion. Now, they got 200% return with $3 trillion. Main Street was given $33 trillion, but their return, was what? On the $33 trillion. Wait, get this? Just 13%. Wait a minute. So the economy grew by 13%, an average of 2% a year since 2008. What are you, nuts? That's absolutely incredible. That'd be like, if you want to judge the performance, to put it in perspective, let's take a car. You fill up your car with $50 worth of gasoline, $50 worth of gasoline. You know your car will travel 200 miles, You know that, When you bought it, was on the sticker price, it said it will travel 200 miles, You get in your car, it goes down the road, stops within 2 miles. Wait a minute. 2 miles, also 200 miles. Now, if it goes 2 miles on that $50, would you say that you got great performance? No. Are you kidding? You'd be upset. Well, you should be upset with this too, because how did you get $33 trillion and only created for 8 years economic growth of 13%? Because where did the money go? Well, let's take a look. The money went to everything except small businesses. It went to all of Obama's friends. The money ended up being the $33 trillion ended up being a Christmas tree. That's right. It was nothing more than a Christmas tree. Here it is. There's your Christmas tree. And everybody got some present for helping Obama get elected the first time around. He gave money to Solander. He gave money to all the green programs. He gave money to everybody. He gave money to the states. Think about this. Stimulus money went to states to pay their cops. Are you kidding me? They got a Christmas present. Police? Are you kidding me? And fire? Federal money not supposed to pay that. And that's what he did with all the states. He wanted to thank them for helping him. if they get elected, all the governors, all the Democrat governors, they get, even one governor got money to fix his tennis court at his home on a stimulus. Believe that? So that's where all this money, now we had a whole group of money. We have what we call money bundlers. Here's your bundlers. Okay, so you got bundlers. They got Christmas presents too out of the stimulus, bundlers. All right? And so you got your bundlers. Now, who are your bundlers? You got Jamie Dimon, you got Lloyd Blankfein, you got all the bankers, Citibank, you got all the big boys, okay? All the big boys, okay? They give all kinds of money to Obama. So he wanted to pay him back, especially Solandra. So Solandra got a whole bunch of money. And what he did mostly with all this money, after he took care of all the stuff he's not supposed to take care of, he gave most of this money to his friends and said, hey, we got a hot new thing going. We got green energy. And, you know, you could make a fortune, all his friends, you can make a lot of money. We'll give you grants. And on all those grants, go open up a plant, do whatever you want, make solar panels, solar cars, solar mushrooms, whatever you want. And guess what? That's a thank you. It's a thank you. So what happened? All these friends of his turned around and took all the money, and they put the money in their pocket. And then they tubed the companies like Solandra and the rest of them. So that's where all the stimulus money went. So 33 trillion, very little reached Main Street. There's no money there was no money for small businesses. They got nothing. Small business got nothing. Households got nothing. Those programs that we're supposed to have, remember the household programs to save your house? It's supposed to be the HAMP program. Remember the HAMP? And you have the HAMP, and then you had the HARP, and that's another program that's supposed to give you money so you don't your house didn't go into foreclosure. And you had the big one, which was HOPE, where they told everybody they were going to bail out 6 million families, homeowners were going to get 6 million, going to get all this money. You know how many homeowners got the money? Not 6 million, 232. That's it. 232 homeowners got refinanced out of 6 million. Now you understand. Now let's go. So you got so this was a bold-faced lie. Main Street made out like a bandit. All the money went in. Stock market went up. Main Street got screwed big. Most of this money was a Christmas tree money, gave all his buddies money, and we got little nothing. Now, what does this mean? Well, this just puts us in a very bad situation in the stock market right now, because this means the stock market, okay, and the economy are disconnected. What's that mean? Well, if you think about it, we are having sales growth at a rate of 4.2%. The S&P 500 companies, okay, the S&P 500 companies are making sales. Their sales rate, their growth rate is 4.2%. So their growth rate, here's a company, and they're doing sales. Here's the sales, and it's going up 4.2%. But now you take out of that Apple. You got to take Apple out of that because Apple is most of it. So when you take Apple out, what happens? It drops. It drops down to 2.6%. That's terrible. 2.6%. That is awful. So we got now, if you think about it, so our sales growth rate of corporations are dropping 2.6%, but yet profits or earnings have expanded by more than 6 times that. 6 times. How could you do that? How could you have, I mean, it makes no sense. How can you have earnings 6 times bigger than sales? How do you have, it makes no sense. Well, it's called cheating. So what they do is they do all their stock buybacks. And when you do stock buybacks, then what that does is push earnings up, and then it push up stock prices artificially. And that's why you got all the stock prices are going up. They're going up. All the stock keeps going up every day because what they're doing is they are buying their own shares. And when you buy your own shares back, that makes earnings go up artificially and stock prices go up. So now we're cheating there with the stock buybacks. Now here's the problem with the stock buybacks. We're boosting the stock prices. So here's a company, this is company X, and it's only worth $20, but now it's trading at $40. Shouldn't be trading at $40. Well, why? Because what was happening is the stock buybacks is boosting the stocks of bad companies up. Companies that have heavy debt, have little earnings, are just lousy companies. There is the big problem. So in effect, it artificially inflated the price from $20 to $40 when it should be $20. But the stock buybacks push it up. And of course, the CEOs go take their options on the stock, putting money in their pocket. Now, then you have huge cost cutting going on in companies. Full-time are being put down to part-time. Wages are being cut. And what happens then? Disposable income drops to a 40-year low, which caused what? Household spending to drop to its lowest level in more than 20 years. Then you have, that caused retail sales to drop in 9 years. So you got wages dropping, you got disposable income, that's the money you have after you pay all your bills, drop to a 40-year low. Household spending is dropped to the lowest level since Obama took office, I should say. And retail sales dropped to 9-year low. That's a very bad economy. As a result of low wages and cuts from full-time to jobs to part-time, we have historic 28 million part-time jobs. That's not good. Or we have no jobs at all. This is associated with the ninth consecutive year, where during which the U.S. economy grew by 2.9%, or, put another way, the anemic aggregate of 13% growth. So since Obama became president, we have this terrible reduction, and we've had a reduction, or we reduced the standard of living for 10 million people. So 10 million middle-class people, they went down, okay? Those 10 million people, middle-class people, forced them into poverty. So these 10 million middle-class went into poverty. Are you kidding? Why? Because this money up here, there was supposed to be 33 trillion in stimulus, was supposed to prevent all this. But instead it went to a Christmas tree. Obama misspent it. It went to a Christmas tree. So now what we got, since he's become president, we got 10 million middle-class people, forcing them into poverty, which there's 107 million now. 107 million in poverty. What are you, nuts? That doesn't make, that's just crazy. So now, as a result, we have this under Obama, and now we got 122% increase in food stamps. 122% increase in food stamps. And we've increased the disability checks from 8 million to 12 million. We got 4 million more since he's been president. My God, this was not supposed to happen. This stimulus was supposed to be a safety net under here to make sure none of this happened. But it's happening. Now, remember, the government, everybody was ecstatic when Obama won in 2008, the presidential race, and when Obama told the American people he would going to be the president to make change, well, he sure did. His inauguration marked the beginning of change, beginning of the U.S. economy's worst 8-year stretch. We never had 8 years in a row. The last time we had a terrible economy 8 years in a row was 1945. Here's your 1945 to where? To 1952. So everybody got excited when we became elected, but look what happened. All this mess is happening, and we had 8-year stretch from 1945 to 1952. We have never had a stretch of this bad. Obama's president in the Oval Office, okay, we got 2 more years of it. 2 more years. That means more middle-class people will slip into poverty, more part-time jobs, less full-time jobs. It means economic growth is going to stop. It's going to get worse, and stagnant wages. All we're seeing for economic growth, remember, all this stimulus was supposed to move our economic growth, our GDP, was supposed to go up to 6%, creating 475,000 jobs from 2009 to 2009 to 2011, and then after 2011, it's supposed to level out to 260,000 jobs a month. Well, wait a minute, we're getting 240,000. We've never got the 475,000 out of the gate. That's because our GDP it didn't hit 6%. We've been averaging 2% because of all this mess here. So at the bottom line, it means this, that we have, what they're doing is inflating a stock market. What they're doing is inflating, they're covering up all this mess over here, all this mess, all this negative. They're covering all this up, and they're masking it so you don't see it. And how are they masking it? With the stock market going up 200%, but only 10% are enjoying it. And then, but by masking it, they're telling everybody, oh, look at the economy. It is really doing terrific. And that's all you hear, how terrific it is. Now you know it's not terrific. It's terrible. So what does that mean for us? They're going to run the stock market even higher. What? Yes, because how do they keep masking all the bad that they've done? How do they mask that we have disastrous household spending dropped to its lowest level since 2008, retail sales dropped to its lowest level in 9 years, disposable income to the biggest drop in 40 years, wages dropped to its lowest level in 30 years. There's your list right here. Home ownership dropped to its lowest level in 25 years. Durable goods sales have dropped to the lowest level in 2 years. And the U.S. trade has widened to its highest level since 2012, the deficit, 2012. Corporate profits, when you remove Apple, as I said, drops to below 2.6%. So what are they going to do? Yellen yesterday said, oh, here's Yellen. What did she say yesterday when she spoke? Another liar. She said, well, I don't think we're going to do anything. We're not going to raise rates from March to April. And then what she basically was saying, we're not going to raise rates at all in 2015. Because what has she got to do? She's got to keep the stock market going up. And how do you get the stock market go up? You got to cheat. What you got to do is you got to print money to get the stock market going up. And when you print money, okay, here's your money. You print all this money. And then that money, what do they do with it? They take it and they inject it. They inject it into stocks. That money is injected into stock. But they lie to you. It goes into stocks, right? But they tell you, no, it's going into the economy. They don't want you to know it's going directly into stocks. They tell you it's going into the economy, but not true, into stocks, because they want the stock market to keep going up to mask everything going on, and there's another reason. We need tax revenue. We need revenue because we're not creating jobs. What he wants to do is go after the 10 percentile right here. He wants to go and tax them even more to fill the coffers in the Treasury. Because he doesn't have enough people working to fill the coffers, he figures, she figures, let's keep the stock market going up with more QE, and then the 10 percentile are going to make an extra $650 million a year off the stock market, which they will tax, and it goes here. Now, what's going to happen to everybody else? The 90% more and more will go into poverty over here. So they're masking all this because they're not willing to fix the problem. They're not willing. The solution is right in front of them, which is what? Small businesses. Support them, get out of their way, create an environment for them, and then you would create jobs. But that's not what Obama wants, because he's a socialist. He wants the middle class to get wiped out. That's what he's doing. And that's why he took the banks. Remember what he did with the banks. He went in and put so many regulations on small community banks, all kinds of regulations, so that they couldn't survive. And they either had to sell themselves to the big bank, or they went out of business. So why do you do that? Well, who supports all the small businesses? The small community banks. If I'm a small business, okay, and I own a garden center, I got to go to my small community bank. I can't go to Wall Street. So what they did is they make sure all the small banks were going to go out of business. How they do that? Regulations. Loaded up so many regulations on these banks that they couldn't handle because the costs are so great. So they either went out of business, which half of them did, and then they get picked up by Goldman Sachs and the rest of them. So that means the small businesses right here, the small businesses, they're the ones we need, and what they're doing, they're killing the small businesses. So they're going to keep doing the same old, and for 2 more years, rallying the stock market. And then what's going to happen? Then that's a bubble, and that's when you get the crashes. When they keep doing this, guess what? There is no economy under it. It's a bubble under it. And then eventually what happens, you get such inflation that everything stops. Pricing stops. Everything starts deflating, and you get your crash. So this crash will occur, okay? It's going to occur sometime after Obama gets out of office. So what do we do in the meantime? In the meantime, we just pick good stocks, because there's no more stock market. It's rigged, but we'll pick good stocks, and it's all about individual stocks, and that's where you're going to make money, and you're going to put cash away for your retirement. And just let's not get involved with all this nonsense. Now you understand why things are so bad. But that's okay, because they're going to keep pushing the market up, and that's why you got to be part of the market. That's why you got to understand. Come to my classes, join my gang, and then you can do very, very well. And what we do is we have a simple system of what we call a PT2 chart that tells us when to buy when it's green and when not to buy when it's red. All right, join my gang, Phil's gang. Thank you for listening.